What's going on, YouTube Nation? This is Start Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit notification bell so you don't miss future videos. So I am back. I'm all partied out. Went to the Ohio State Nebraska game, very close one. Hung out with family and stuff, and actually the Browns won, which is a surprise. And I promised you I'd post a video today. And I need to go over some changes that I made because I need to kick up the monthly passive income with my dividend portfolio. I made some changes, okay, some additions to my M1 Finance dividend portfolio. Now this one, risk is up there, so you have to be aware and do your due diligence with this one. I myself can take this risk. Other people, I don't know, because if things go bad, they go sour, it's going to hurt. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out my dividend portfolio right now. So first, right now, my dividend portfolio, I'm at $142,695.86. Say that 10 times fast. I've received $14,331.45 with dividends. My money weighted rate of return is 20.14%. So right now in my primary pie section, I have Essential Properties Realty Trust, Starbucks, GoLub Capital, Getty Realty Corporation, Broadstone Net Lease, Morgan Stanley, Invitation Homes, Blackstone Secured Lending Fund. I have AVI, Digital Realty Trust, ADP, Automatic Data Processing, Bank of Nova Scotia, Crescent Capital, Darden Restaurants, Yum Brands, Alexandria Real Estate Equities, a very strong REIT, NetStreet, Aflac, they've done extremely well, American Financial Group, Prologis, it's probably one of my favorite real estate investment trusts, Coca-Cola, Toronto Dominion Bank. Yes, I started re-adding MSTY. Now, these ProShares monthly dividend ETFs, the ones that do options income, you have to be extremely careful. And I'm going to be honest with you, the risk is way up there. Me, because I make, I'm single, have no kids, I could take a hit. They do a reverse stock split, I can take a hit, that's fine. Other people, they take a hit, kind of hurts. So you have to be aware and do your due diligence. I myself, I'm going to take the risk. Somebody asked me, should I take the risk? Again, I'm not giving financial advice, but I would even look at you and say, I'm taking a huge risk. It can blow up in my face. There's a strong possibility it could. Okay, 50-50. Could go bad, could go wrong. I don't like those odds. Now, again, entertainment purposes only, but you can lose some money. So if things go bad, these are very volatile ETFs that follow very volatile stocks or cryptocurrency. Remember, that's not actual cryptocurrency. It's not actual stocks with MSTR. Synthetic calls and stuff. So even riskier. Okay, so the stocks, Bitcoin, they're not going to beat, these ETFs are not going to beat the actual stock or, cryptocurrency or whatever you want to say. I'm doing this for income. I am an income investor, okay? I am using the income of MSTY, which I have right now currently 15 shares. That's not a lot. I also have right here BITO, which I started loading up, 22 shares, okay? And I also have YBTC, the Roundhill one, 9 shares. Again, I want to make at least 100 a month with them. AMDY, 33 shares. Okay, started loading up on them, making some decisions. FBY, I have 23 shares. So you're starting to see the Yieldmax ETFs re-added. As I said, CONY, I'll take the risk. This one can go bad too. So again, many people call them a yield trap, so be careful. So long term, this could be very, very risky. So 31 shares with CONY. I honestly, if things go bad, I'll take the risk. So I'm just telling you, other people, I mean, I will take the risk. I'll say it 1,000 times. Can it go bad? Yes. So can I take a hit? Yes. Can I recover? Yes. But it's going to, this one could be a while. SQY, right now, I have 25 shares. So if you watch my previous video with NVDY, now I have WP carry, okay? So I'm back in WP carry, love the REIT. Care Trust REIT, I'm back. We got, again, Coca-Cola, I'm starting to buy them. With Prologis being down, absolutely am I going to buy more. So I'm hoping this passive income, again, once I get to enough good passive income, I think what I'm going to do with my strategy, as I said before, is load up on this and then go on E-Trade and use the passive income from my E-Trade covered call ETFs that are a mirror image of the ones on here to load up in here, so that way I can load up and buy dividend growth stocks, which have been doing very well. So my activity, let's just go over dividend income. It's been pretty good. Okay, this is paid certain months. I've made $2,196.27. That's more than I pay in rent. Now, of course, I'm going to reinvest. I would be stupid not to reinvest, but if I can use that income, okay, remember, I got rid of the Defiance ones. I don't feel good with the Defiance ETFs. Okay, I explained that maybe in the future, if things are good, the market's good, yes. Okay, NVDY, like them. Okay, MSTY, CONY, again, buy them on E-Trade separately, reinvest their passive income and throw it in these, and then reinvest to build it up. So that's what the plan is. So again, with NVDY in October, you see AIPI 8362, MSTY 6676, NVDY 40928. So again, imagine reinvesting 400 from my NVDY on E-Trade and throwing in my NVDY on M1 Finance. So again, it's going to be a process. It's going to take time, but I really need to focus on the monthly passive income to grow my dividend portfolio. It's not going to happen if I don't have sufficient funds, and the sufficient funds can come from my passive income on the Yieldmax ETFs. Now, some people do JEPI, some people do JEPQ. Okay, some people do RYLD, XYLD, QYLD, they still do that. So be aware of that. But again, taxes you have to be careful with. So I turned down one job for an NP job, nurse practitioner. I mean, I'm a travel nurse right now, and I would have to take a pay cut. And I'm not going to do every other weekend as a nurse practitioner when I do every other weekend as a travel nurse, okay? And take, let's just say, well, I'm not going to say how much of a pay cut would be, but it'd be a turnoff, because again, working 312s and maxing out my IRA and doing all this, that comes into consideration. But it's going to get to the point where I'm done travel nursing and I'm going to need sufficient funds. So I'm going to use the Yieldmax ones. Now, some people think it's very radical, but again, the returns of NVDY have done very well, and it's quite impressive each month. Now, think about that. Now, is it guaranteed? No. This is why I'm telling you the risk is high. Okay, the risk is high. So, I had to really think about this. And can I take a hit of 10, 11, 12,000? Sure. I can do that. Most people can't. So, and then the questions people ask me is, do I have QDTE, RDTE, XDTE, NVDY in my IRA? And the answer is no. I'm very strong with VGT, very strong with Apple. I'm very strong with NVIDIA with my IRAs. And I'm going to be rolling over one IRA as well. So, thinking about the consideration of, putting that in an IRA, no, because I want my net worth to increase over time. I'm in VGT for the technology. I'm in some of that. I'll probably roll over my one traditional IRA next year and maybe throw it in SPLG or SPYG, or I have a lot of things to think about. So, I'm looking at net worth. I don't like high expense ratios with an IRA either. So this is what I'm doing. This is my income portfolio. I like dividend growth stocks. Dividend growth is going to win. And hopefully it'll be turbocharged by the Yieldmax and Roundhill and Proshares ETFs, because they've done very well. And I'll even show you my most recent days of passive income. In my most recent days, again, using this passive income, the weekly passive income from YMAX, YMAG, and others, RDTE, to build up my dividend portfolio. So we got BXXL, that's a business development company, 1848. RDTE, weekly passive income, 1184. MSTY, 6676. SQY 2173, YMAG 379. That was a low day for them, or a low week for them. That's fine. That's why I'm diversified. YMAX 2353, BXSL 50 cents, AIPI 8352, QDTE 1389. That's weekly. Then we have American Tower. That's a good dividend growth real estate investment trust, 1506. Then we got FBY 2967. Then we got XDTE, it's 1312. And then American Financial Group, 338. And then we have a little bit of Comcast, 452. So you're seeing that, okay? So again, it's all about reinvesting in your strategy. Now, mine's way more aggressive than most people, and some people probably shouldn't take that risk of being aggressive. So again, this is me, this is my story, this is my passive income journey. This is about being aggressive, okay? Might be way too aggressive because, again, you fumble, you're driving, run that Navy offense, and you fumble the ball. Now, that's an aggressive running offense, but you fumble twice, you're behind, and you got to throw the ball, you're in trouble. You're down 14, 17 points, 21 points in Notre Dame. Kind of hurts. So, again, that's kind of where I'm going. The risk is up there. So, I just want to be clear. I'm going to repeat that 1,000 times. This is just my passive income strategy. So far, it's working very well, but it could be bad. So I'm just letting you know. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm thinking for the next month or two to reload up on the options income ETFs, the monthly passive income, and then flip it, start going after the dividend growth stocks. I need to get big. I need to get strong. I need to really pound it, and then hopefully flip it and start buying those dividend growth stocks, because there's some serious potential with this strategy if it works. And again, I'm not 40 yet, so imagine 15, 20 years doing this. I'm not going to be retiring in 50. All right, I'm just going to tell you, I enjoy what I do. Need to enjoy myself, okay? I don't want to just retire off making $50,000 a year. I want to make a lot more. You got to be patient. You got to be dedicated. Buy and hold. Focus on what you got to do. Yes, I'm probably going to be a millionaire in the future just by my net worth increasing, my investments, my IRAs doing extremely well, 401k or 403b. So that's what I need to look into right now, is increasing my net worth and maxing out my IRA and going from there. So I have a goal to be a millionaire. That's going to happen. I can already see it because I'm exponentially increasing my net worth. That's hoping by 50 to call myself one, but let's just worry about the here and now. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I will have a video for you tomorrow. Take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence. Go see a financial advisor or tax advisor if you're looking for financial advice or tax advice. This is strictly for entertainment purposes only. This is my investing journey to earn passive income and to make good money. So things are a risk. I'm telling you, you have to do your due diligence when it comes to investing. So I'm going to be very clear with you regarding my passive income strategy. I've told you that before. So be aware of those risks. Things could go bad for me. You're watching my YouTube channel. I'm being very transparent with everything that's going on. You guys take care and have a good one.